Good evening and welcome to Financial Markets Tonight. Let's start with Friday's closing numbers on Wall Street. The three major indexes ended nearly flat. The Nasdaq closed at 25,888.84. The S&P 5,000 finished at 7,431.46. And the Dow Jones Industrial Average settled at 51,202.26. Pre-market futures were also flat as the market lacked a clear directional catalyst heading into the weekend. On the stock level, Tesla rose 1.86%, and MicroStrategy gained nearly 3%. Both were relatively active but did not trigger any abnormal volatility thresholds. We saw no verified stocks with moves exceeding 8% yesterday. Over in China, Friday's A-share market closed on a positive note. The Shanghai Composite gained 1.12%, and the CSI 300 rose 1.16%. That provides a constructive anchor for today's open. Now let's turn to the global macro picture. The 10-year U.S. Treasury yield is currently at 4.49%, down slightly from 4.552% a week ago. This signals a marginal easing in liquidity conditions. The VIX Volatility Index stands at 17.68, well within the normal 15 to 25 range. There is no panic in the market. The US dollar index has broken below the key 100 level, now at 99.81. This is a clear weak dollar environment, which is positive for valuation recovery in emerging market assets. In commodities, WTI crude oil is trading at $84.88 per barrel, down 5.56% over the past week. This reflects cooling demand expectations combined with technical corrections. Gold is at $4,238.80 per ounce, down 2.82% for the week. Despite a weaker dollar, gold failed to find support, suggesting capital is flowing toward risk assets. So what does all this mean? The global market is currently in a risk-on environment. We have three confirming signals: a persistently weak dollar, a low VIX, and moderately declining Treasury yields. All point to rising risk appetite. The condition for this thesis to break would be the VIX climbing back above 20 and the 10-year yield rising above 4.55%. On the currency front, the dollar-yuan exchange rate is around 6.76 for both onshore and offshore trading. The yuan has appreciated modestly over the past week, with offshore CNH moving from the 6.77 range down to 6.76. This reflects a gradual strengthening of the yuan against the backdrop of a weaker dollar. If this trend continues, it should reduce foreign capital outflow pressure and provide positive support for foreign flows into shares. On the trade and technology front, there have been no verified new developments as of today. Our pre-market sentiment assessment for shares today is a modestly higher open. This view would be invalidated if offshore CNH suddenly weakens past 6.78 and the A50 futures turn negative during the session. Looking at the A-share market specifically, the Shanghai Composite closed last Friday at 4,031.51, firmly above the 4,000-point threshold. Supported by three factors: a weak dollar, a low VIX, and last week's upward momentum, we expect the market to maintain a cautiously bullish bias today. However, volume may shrink due to the weekend effect, making a major breakout unlikely. The bullish view would be invalidated if the Shanghai Composite breaks below 4,000 in early trading and fails to recover within 30 minutes. In terms of sectors, we are focusing on consumer staples and utilities. Last Friday's market structure showed the Shanghai 50 index outperforming the Chinex board, indicating that blue-chip stocks are leading the rebound. In the current environment of falling Treasury yields and a weak dollar, low-valuation consumer blue chips and high-dividend utility stocks are becoming more attractive to foreign investors. We see near-term pressure on the new energy sector. With crude oil falling 5.56% in a week and Brent dropping below $88, lower energy costs are dampening the narrative for new energy substitution in the short term. For northbound capital flows, the combination of yuan appreciation and global risk on sentiment suggests a high probability of net foreign inflows today. Watch for whether cumulative northbound net buying exceeds 15 billion yuan in the first 30 minutes of trading. Here is our bottom line for today. With Treasury yields falling, the dollar weakening, and the VIX at low levels, the risk-on window remains open. We expect the shares to trade with a cautiously bullish bias, with blue chip sectors leading the way. Thank you for watching, and we will see you tomorrow.